After years of soaring prices, could Canada's housing market be heading for a downturn? Home sales are down, interest rates are also shifting, and if you're planning to buy, sell, or invest in 2025, this can change everything. In this video, I will show you exactly why the house prices might drop and how it could affect you and what you should do about it. Meanwhile, comment below, do you think house prices will rise or fall in 2025? Well, let's see what the data is telling us. The latest data from Canadian Real Estate Association paints a very clear picture, which is the house sales are dropping. February 2025 saw 9.8-degree drop in house sales when compared to January. And this is the biggest drop since 2022. And average home prices have also fallen by 2.1% month over month. And the number of new listings are rising. More homes are hitting the market as sellers are trying to cash out, but the buyers aren't showing up. One of the primary reasons for this could be the tariff threat imposed by the US. And if you look at it on the data perspective, it is starting to create oversupply situation in some markets. We are seeing fewer buyers and more homes sitting on the market, and that's exactly how a downturn starts. Fewer buyers, rising cost, and economic uncertainty. It's a recipe for market slowdown. We have seen this before. In 2017, the Ontario Fair Housing Plan introduced a foreign buyers tax. The house prices dropped by 4.4% in just 6 months. In 2019, saw house prices stagnate for nearly a year before recovering. The housing market doesn't rise forever. When affordability becomes an issue and demand drops, prices correct, and it looks like we might be headed for another correction. So, how far could prices fall? Well, CREA forecast home prices could drop by another 5 to 10% in major urban markets like Toronto, Vancouver, and Montreal. And BMO also predicts a potential 7% drop in home values if the interest rates remain above 5% throughout 2025. An RBC outlook suggests a soft landing with home prices down by 3 to 5% by the end of 2025. The biggest declines are likely to hit higher priced markets where the affordability is already stretched thin. So, what does this mean for you? If you're buying, the prices could dip in 2025, which can save you tens of thousands. And if you focus on motivated sellers, especially in higher priced markets, and you have to be prepared to negotiate because buyers will have more leverage. And if you're selling, you might need to price very competitively because buyers are going to be very cautious. Consider selling early to avoid getting caught in a deeper correction. And if you can't sell, renting could also be a smart fallback option, especially if you can generate a positive cash flow out of it. And if you're investing, look for distressed properties because opportunities will increase. Focus on cash flow rather than appreciation because rents might stay stagnant even if the prices dip. So there is going to be lots of opportunity in this market. Here's the bottom line. Home prices are already showing signs of softening. Waiting can save you money, but knowing when to act will likely be the key. So are you planning to buy, sell, or invest in 2025? Let me know down in the comments. And till then, don't forget to like and subscribe for more updates on the Canadian housing market. See you in the next video.